Most people buy blue chip stocks as a lazy way to get good returns. But what if you could do better? There are a few stocks that do outperform the S&P 500, but here are my top 3 that could actually double this year. Stock 1, United Health or UNH. Now UNH has been beaten up all year around, and that's why it has room to run. The stock fell at first because medical costs went all the way up, and the government is watching the company more closely, and earnings were weaker. But now things are improving. Warren Buffett himself even bought into it, which is a huge vote of confidence. Now, UNH is currently trading at around a PE ratio of 17, much lower than usual. Net margin is about 3%, debt to equity is 0.8, and current ratio is close to 1, and return on equity sits around 18%. These numbers are not perfect, but they do tell me the business is still strong even after a bad year for a healthcare business. And when the pressure comes off, stocks like this bounce back very fast, especially in the final year of the cycle in 2026. And UNH could easily double if earnings recover and healthcare spending normalizes. Stock 2, Lululemon. Now, Lululemon dropped nearly 50% in the last 1 year because sales slowed down a bit and investors were panicking. But here's the part most people missed. Lululemon still has one of the best balance sheet in the retail business. Net margin above 13%, return on equity above 40%, and debt is very low. Their PE ratio is around 11, which is very cheap for a global brand with loyal customers. This is the kind of stock that people hate at first, and then it surprises everyone. If Lululemon even gets a small boost in demand or returns to normal growth with its big growth overseas, the stock could double from these levels. Stock 3, Alibaba. Now this one is a shocker. A lot of people hate on Chinese stocks right now, and that is exactly why it might double. Alibaba is still one of the biggest e-commerce and cloud businesses in the world. It trades at a PE ratio of around 18, which is crazy low for businesses with this much history and scale. Net margin sits around 10 to 12%, return on equity around 17%, and debt level is very reasonable. And these numbers show that the business is stable even though the stock prices say otherwise. So why do I think it can double? Well, we are in the last year of the cycle, where investors transfer their funds from developed markets to emerging markets like China. This is the year that these markets tend to perform the best or outperform. And China is warming up its economy with stimulus, and Alibaba is buying back billions of shares, and cloud demand is rising again, just like the 18-year real estate cycle has predicted. And when sentiment flips even slightly, stocks this cheap can explode upwards. Now, if you do want to learn how I use my value cycle framework to find stocks that can double before everyone else notices, join my free newsletter, link in bio. Also, tell me in the comment section down below, which stocks do you think can double this year?